There was nowhere to hide for investors during March. The geopolitical situation in the Middle East hit shares, it hit bonds, and even hit gold that had been doing so well this year and last. So what to do for investors? What steps should they take or not, as is often the best rule for most? Join us for this month's investment market update from Fairstone Ireland. Really, March was an extraordinary month, dominated by the Middle East conflict. While the conflict has major humanitarian implications, it also hits investment markets, and certainly it hit them very, very hard. The interesting thing we saw during the month of March was a complete about turn from what we had been experiencing so far in 2026 and during 2025 as well. We saw the US market sell off very, very sharply. It is the biggest investment market in the world, but not by as much as the Japanese market or emerging markets or even European markets. So what's going on here is we're seeing a flight to what we call safe havens. And usually in the middle of a crisis, the dollar is often seen as safe haven. We're also seeing emerging signs of inflation. So some parts of the investment world will be hit harder than others when we see rising inflation. The monetary authorities like central banks really don't like higher inflation. None of us do really, but what that tends to result in is if we see higher interest rates, that often hits the parts of the stock markets that are usually on a very high growth trajectory. So that is things like technology and communication stocks. That's why the Nasdaq index fell really hard during the month of March and was certainly one of the biggest losers. Higher inflation is also very bad for the bond markets. We always talk about having that mix of shares, bonds, property, cash and so on. Well, the bond part also got hit. So unusually, we tend to find when one way of investing is doing poorly, that the other can do okay. Well, during the month of March, pretty much everything went down. So higher interest rates, bad news for the bond market, and we saw bonds coming down as well. Not by as much as shares, but nonetheless did experience some sell-off. Some of the international bond holdings that investors might have, let's say in the US, also some of their stock market holdings, the strength of the dollar during the month will have softened the blow of some of the sell-offs that we saw during the month. So a little bit of insulation provided. Unusually, we've also seen some really significant what we call mergers and acquisitions activity. So that's big companies buying each other. So during this month we saw the takeover of McCormick by Unilever during the month. That's about a €60 billion merger, very, very significant deal. We saw Conterra and Devon, two enormous energy companies merging together, not surprisingly with so much going on in the energy space at the moment. One big surprise during the month was that the price of gold actually fell. Again, surprisingly, because it's seen as a safe haven. When we see expectations of higher inflation, if that may lead to higher interest rates, that's usually negative news for gold investors. So gold came off a little bit as well during the month. The other part of the commodities universe was oil, which rose spectacularly during the month. Let's look at some of the key messages for investors out of what we've seen so far this month. These major sell-offs in markets, they're not unusual. We've seen them before and we will see them again. Usually at times like this, what's critically important is that you're very well diversified, so that you're not holding only one type of share and that you have your money spread across the main markets. It doesn't mean that you don't experience falls. What it tends to do is it limits the impact of those falls during the month. So why diversification and not to react to short-term news in the marketplace? We have seen many conflicts in the past, and investors who sit tight, ride out the storm, tend to be those that are most rewarded at times like this. As always, here in Fairstone Ireland, we'd be delighted to talk to you to walk through your needs and your existing portfolios, but rarely a time in the middle of a conflict to make sudden decisions about your long-term investment plans. So you stick to your plans and we will certainly help you to do so. Thank you for your time today.